is now going to go up much faster than gold. And so that's also wealth preservation, more volatile than gold, but nevertheless also a very interesting investment. It's not going to stop at 50 this time. It's going to go much higher than that.
Ladies and gentlemen, welcome there to Egon von Greyerz. Another month has passed, the time flies. Grüezi, Egon, great to see you again in best health and all the best for your birthday, okay? Let's discuss many interesting topics today.
Yes, yeah, well, it's been an interesting period, to have been alive for a peaceful period of 80 years in the world since World War II finished. I think sadly the peace is now over for the world, and we are heading towards a much more difficult period. And the risks we're both seeing. Obviously there's the financial risk, the monetary system, the currencies, the debt situation. But then also there are two other risks which I see as major and of major concern, therefore also, which is, of course, the war risk. I think the war risk is now looking very, very serious for the world. And it's not going to be a war like previous wars, but it will be a global conflict on a major scale. And on top of that, we are going to have civil unrest and problems within countries, US, Europe, Germany, France, Italy, etc. So we are heading towards a period of very high risk for the world, higher than the world has probably ever seen. So what we do and what we will discuss, Jan, has now a bigger significance than ever, in my view.
I absolutely agree, Egon, but nevertheless, the stock markets at least are celebrating yesterday. Trump is playing the markets, and what was the reason? The trade deal between the US and Japan made the Dow Jones jump over 45,000 points. Either it is a new record high or it's very close. But what went into the background? The Putin ultimatum, 1st of September. And if we go back in history, 1st of September, that already played an important role 86 years ago. You just said it. I think those are glimmers of hope that the market is picking in a situation that is really hopeless and that requires preparation. What do you think?
Well, Jan, you just said it. I mean, that the world is hopeful for the wrong reason. They've fixed on one single thing, like, well, the tariffs might not happen at the massive level that Trump is threatening on a daily basis and also changing on a daily basis. But the stock market is totally out of proportion to any risk that I'm seeing. As I just outlined a couple of minutes ago, the risks are major. The stock market doesn't belong where it is now, but it, of course, is all linked to money supply and the flow of money, and there's still too much money around, and that's why the stock markets are high. At some point, whether it's in a month's time or whether it's in 3 months or 6 months, the stock markets are going to come down substantially. And over time, as you know, I believe that stock markets in relation to real money, in that is gold, I think stock markets are going to go down at least 75 to 95% before this cycle is over. But that will take some time. But that's the risk we're looking at here now, Jan.
Egon, I think Trump knows what is coming and he requires now something from the Federal Reserve that he criticized few years ago. Trump really requires the Fed to lower the interest to 1%. Let me quote. US President Trump says the Federal Reserve should set its benchmark interest rate at 1% to lower government borrowing costs, allowing the administration to finance the high and risky deficits expected from his spending tax cut bill. Trump should be careful what he wishes for. At 1%, but let me first show the article because that contains also interesting graphics. I continue. At 1%, Fed policy rate has not been uncommon in the last quarter of a century, but is no sign of good times considering with joblessness of 6% and higher. And Egon, this is an interesting graphic. Maybe Trump expects the jobless claims or the unemployment rate to increase shortly, but clearly for us to see what would it mean in environment of increasing rates. That's a clear sign for all investments or all investors in bonds, US debt, get out as quick as you can. What do you think?
Well, this is madness again. Interest rates at 1%. They're pumping out money in the trillions on a yearly basis here. And that money, as we know, will never be repaid. And they need to borrow unlimited amounts of money, and the deficit and the debt will increase exponentially. And that doesn't go hand in hand with a 1% interest rate. First of all, Powell will never, as long as he's there, he will never allow that. So Trump is either planning to fire him, and he can't really fire him because then the markets will not accept that, and that will be very bad for dollar, for stock markets, etc. So they're now working on a plan that the U.S. Treasury and the Fed is going to merge in one way or another. I think that's the longer term plan, and that could happen in one of these executive orders overnight, I'm sure. And again, I'm sure it's against the Constitution, but Trump has never worried about the Constitution. He just issues another executive order, which is not in line with the U.S. Constitution. It's possible that here, as I said, that they are working towards not just replacing the Fed or merging the Fed, giving the Fed less power and therefore more power to the government. And this government is constantly just grabbing more and more power. And then, what they're doing also with cryptocurrencies and stable coins, etc. And also Trump, of course, the whole family is totally involved in everything crypto there is. And hoping and planning to make billions or more out of these currencies. That is very corrupt when the administration gets involved in these kind of schemes, or the family of the administration. So and therefore they're hoping to gradually get rid of the dollar. That's, in my view, that's one plan, and then replacing it with stable coins. So the dollar is gone, and here we have a new stable coin. Yes, maybe backed by treasuries, but it's like a new currency. And because CBDCs, the central bank digital currency of the US, will never issue. They've said that. So therefore, instead, they will have their own cryptocurrencies. Cryptocurrencies cannot be the money of a country. The electronic money is always going to be fiat money and always going to be manipulated in a way that will make the country suffer. So, there's so much going on here, Jan, and it's all in order to finance a deficit that cannot be financed. So, 1% interest rates, you cannot borrow anything. No, there's not a single investor who will buy a US Treasury at 1%. So they will try to find other ways of just printing money and creating other instruments. It's not going to work. You will see the dollar collapse. You will see stock markets collapse. And obviously, Treasury bonds will collapse also. And instead, interest rates are going to go much, much higher. I've always been of that view. They're not going to stay at current 4%. They're going to be in the teens or much higher, as the US is on the route to defaulting.
Egon, we observe something interesting. Although we saw this euphoria in the market yesterday, gold and especially silver is holding up very well. In other times, some years back, the correction would have been much more harsh, but that is not happening. There's already one guy coming out and offering himself to Trump as somebody who would do what he requires. Let me read from an article by Peter Schiff. Fed Governor Christopher Waller recently said he would accept the Fed chair role if the president asks, while also backing a rate cut as early as July. That comment has raised concerns about political influence over central bank decisions, exactly the kind of dynamic Schiff warns would undermine the Fed's independence. Recently, Schiff has warned about this repeatedly in recent months, saying that after Powell, Trump's pick for the Federal Reserve chair will be a loyal soldier. He says Trump will likely nominate the most dovish replacement to ever chair the Fed. Exactly, Egon, that means the political influence will increase as with the ECB, as everywhere in the West, and that's of course not good for fiat money and supporting precious metals. And we saw it, although gold is still correcting in a sideward phase, it's holding up well. So that speaks for precious metals clearly. But on the other hand, if we can expect that Powell will be replaced by such a dovish guy, what could that mean for the other fiat assets? It could support them for a while longer. We saw it, and we did even an interview years ago, Egon, that in Weimar Germany, when the inflation gained pace, you were not able to beat gold with stocks, only very few stocks. So even if the nominal value of the stocks can be kept up or even increasing, you will not beat the increase in precious metals with that. Maybe with some exceptions, but few. So I think it's still no way around precious metals this time.
Yes, Jan, and what investors have to realize is that they shouldn't look at a gold price and a chart of gold going up all the time and gaining value. They should just turn the chart upside down and see the dollar and all the other currencies collapsing. And that's what's happening. And that is going to accelerate just as it did, as you mentioned, in the Weimar Republic and in any hyperinflationary economy. So what we're looking at is not inflation, is not gold going up. It is actually the value of money now going back to zero, as it always has every time in history. Every monetary era has ended with the currency going to zero. So we're going to see that again. And this is why people, of course, need to protect themselves in gold and silver. Now, and unfortunately, Jan, investors are still much more interested in making money rather than preserving wealth, because they don't understand the need to preserve wealth, because they made so much money in stock markets, in property markets, in bond markets, in private equity, etc. So they still believe that that will go on. Shangri-La is here forever. But that's not going to be the case. So if for investors who still believe that they want to make money, well, turn the gold chart back up again and show gold going up instead of the currencies going down. And gold will now outperform, as it has done in the last 25 years, in the whole of this century. Gold will outperform every asset class in the coming 5 years, 10 years, or whatever. And at the same time, it will be protecting your wealth as the most stable form of investment held by you personally or controlling it personally and not within the financial system. So it's such an easy solution to a massive problem, Jan. And this is what people should do. So they will both protect their wealth and enhance their wealth substantially, because gold, as I said, will gain relative to all their other asset classes considerably. That includes stock markets, bond markets, property markets, etc. That's what we're going to see in the next few years. And the ones who are actually jumping on that gold wagon, they will benefit, and the ones who don't, they will suffer. It's not coming from a gold bug. It's coming from one who understands the risk and who understands wealth preservation and who spotted this already 25 years ago when gold was 300. We're now in a new phase for gold. It's like a paradigm shift, because we have now BRICS countries, major investors, institutions, etc., who are all going to go into gold to protect their assets, and there is not enough gold around for all of these people joining, and therefore they can only be satisfied by higher prices, not by more gold, and that's going to happen in the next few years.
On to the BRICS and Russia, I come in a moment, but let me add first some hard facts about the US. Let's look at this. It starts 2010, and we see here the bars are increasing all the time. So the interest paid is increasing, and here the interest rate was also increasing, and we can expect this bar to grow because 2025 is not over yet. But if we look over a longer term, then it looks really devastating. Interest payments back to 1950, 1947. And here, Egon, you know it well, 1980, interest rate 20%. And since then until now, the interest payment, if I calculated right, went up by a factor of 11. Can you imagine this? So Trump has no other choice than to require to lower the interest rates. This is a no way out situation.
Jan, may I say that, I wrote an article a few months, no, probably at least a year ago, when I extrapolated the current debt situation in the US. So we're now 37 trillion. I actually, when it was 20 trillion, I said we're going to go to 40 by about this time we're now. So it's so easy to extrapolate because it goes up by such a predictable amount every year. In that graph, I showed that I think US debt will probably be around 100 trillion in 2036, I think I said. And I think interest rates will be at least 10% then. I think they'll be higher. Or certainly, if not exactly on that date, during the period leading to that, because it will be high inflation and there's no way of financing that increase in debt at 1%. No one's going to give the US any money at 1%. So with that risk involved. So if you're taking 100 trillion and 10%, and I think 10% is low, then you're talking about then you're talking about 10 trillion in interest costs. Now we have 1 trillion. It's going to be 10 in a few years' time. And that's what the US is looking at. So we're looking at a nation which is going to default or go bankrupt. They will not declare bankruptcy. They will just say that we defer all the debts and we're not going to pay you for the next 20 years or so. That's what they will say. But of course, the dollar would show what's happening, or whatever currency at the time there is, if there is a cryptocurrency, because that will decline dramatically.
At the beginning of our interview, I mentioned this possible black swan event while the market is celebrating. You know this, if there is no agreement or a ceasefire between Russia and Ukraine by early September, Trump threatens to impose tariffs of up to 500% to all trading partners who buy Russian oil. I consider this a serious threat, and I don't think that Russia will give in. Why should they? How do you assess this? I think it's not the time, we said it already, to play the markets, rather to protect.
Well, as we said at the beginning, the risk is massive. You're absolutely right that Putin will never give in. The 50 days will be meaningless for him. He will not care about 5,000% tariffs or whatever. He will just continue to trade more and more with the BRICS countries as he is doing already. Sure, Trump will try to punish all of those, but the US cannot fight on its own against Russia, against China, against Iran, against North Korea, these powers who are extremely powerful, both militarily and some of them also financially, or in resources like the Russia. It's a losing war that Trump is now conducting, and in the end, it will be the US that suffers. And Russia is used to suffering. The Russian people is used to suffering. So they're not going to give in. They're never going to give in my view. And that's why we will have continued conflicts, wars at some level, hopefully not nuclear wars, because then you and I are not going to sit here and talk anymore. We will be somewhere else. And therefore, but there will be other kinds of wars. That there'll be, cyber wars. There will be, obviously, with the drones are very effective, and you can have local bombs in any major city, for example, without destroying a whole country. And I think that's likely to happen. I think we're going to go into a high risk scenario now, and it's going to be very difficult for people to protect themselves totally. Sure, we know about protecting yourself financially, but physically it's not going to be straightforward. You know, areas will be attacked as I said, on a smaller basis. Enough to have a few bombs in some major cities without attacking the whole country. And you will have total mayhem. And I wouldn't be surprised to see that. Obviously, we don't wish it to happen, but I think the risk is there today. And the US is doing everything they can to put pressure on China and Russia, but they're not going to give in. And as we saw in the US, with the help of Israel, bombed Iran. They're going to do it again. So that conflict will also escalate, most probably. It's hard to predict exactly how this will go, but I have to again stress that the risk is going to be higher than ever, and people should really consider what they can do in addition to, of course, as I said, protecting your wealth, which is a relatively easy thing to do. To hold gold and silver, it's only a question of where you hold it, which people have to consider. But in addition to that, is also a question of survival. So it's going to, as I said, we've had 80 years of a peaceful world in the West, and now we're going to start. Now we're already in a war cycle that could lead to a major war, whether we call it World War III or not. But that's what I see now, and obviously no one can be happy about it. But we should be aware and think about what we could do.
Yes, I think, however the outcome will look like, Egon, it will paralyze the trade very likely, and it will increase the rift between East and West, and the Russians continue with their preparations towards this direction. They set up a new trading platform for gold in St. Petersburg, and as you and I and some others expected, the de-dollarization is continuing. Russia, the world's second largest gold producer, is to free itself from the current dependence of gold prices on the London Stock Exchange and plans to launch gold trading on the St. Petersburg Exchange by the end of the year. Russia is not only one of the largest gold producers, it's the second largest, we just read it, but also stores its own gold in Russia. This means that Russian gold purchases for storage in its own reserves instead of storing currencies from unfriendly countries, has become an important step towards de-dollarization and financial independence. The duplication of the exchange in St. Petersburg will also be open to BRICS countries and their traders, and creates an alternative to Western markets, which has been noticed by other central banks, have demonstrated their ability to both freeze and sell assets that do not belong to them. Exactly, that's the point. If you want to avoid to be your assets frozen or taken, move towards gold. And we see this, and the BRICS are invited. And we just had it, Egon. Trump is threatening, the biggest debtor in the world is threatening other countries who are much lower into debt. But the point is, with Trump, you know it, if you drive somebody into the corner and he has many nukes, what will be the outcome? But the East, the BRICS are clearly preparing.
Absolutely, Jan. And the saying is very simple and very clear. Follow the money. Follow the money means the only money that's ever survived in history, not the funny money that now the Trump administration is trying to install into the US with crypto money, electronic money, or whatever it will be. That's not money. That will not be around 5,000 years from here. Follow the money, the only one, the nature's money, which is gold, and follow the people who actually invest in gold. The US hasn't bought gold for decades, and probably sold or leased a big part of their 8,000 tons that they're officially declaring. Whilst China and Russia, who are declaring around the 2,000 tons, both of them, as official gold, probably have 10 times that, both of them. Gold doesn't solve everything, but it shows power. Gold has always been power and economic power, and therefore, in the end, also political power. That's going to be, and the whole of, as you said, the BRICS nations were doing the same. So they're going to continue to invest in gold. They're going to continue to replace dollar reserves, the central banks in the BRICS countries, with gold instead. So gold is going to continue its journey upwards. I hope it doesn't go too fast. We don't want that. We want just a gradual increase in the price over the next few years, or 5 years, or 10 years. As I've said many times, Jan, gold will go up by multiples. For people who also want to have a bit of fun in a safe investment, they should buy some silver now. We always recommend that you shouldn't hold more than 20 to 25% in silver. I think you could go up to 30% now in silver relative to gold, I'm talking. Silver is now going to go up much faster than gold. And so that's also wealth preservation, more volatile than gold, but nevertheless also a very interesting investment. So that's what we recommend to investors. Hold your main part of your assets in physical gold outside the banking system, and hold up to 30% or so in silver, because we are going to see a real ride in silver, and that has started now. We're now at just under $40. We are going to see, it's not going to stop at 50 this time. It's going to go much higher than that for a very long time. So it's a very interesting opportunity of combination of wealth preservation and massive appreciation potential also.
No, and I agree. Obviously, silver at 39 and something is still a big bargain. I always encourage the people, do not listen to those critics who say silver is dead and it was already at 50, 1980, etc. It's still a big bargain. But let me close with an interesting observation from Japan. I found it here on Substack, Vince Lanzi. I read it to you and to the audience. Japan's largest gold dealer, Tanaka Precious Metals, has announced major changes to its gold investment services. Starting this December, customers will no longer be allowed to withdraw gold by flexible weight. Instead, only fixed bar sizes will be permitted, and all account cancellations will be settled in cash. No more automatic bullion delivery. Officially, the move is attributed to rising operational costs and logistics. But given regional evidence of physical gold shortages, from halted bar sales in South Korea to China's surging demand for large institutional bars, Tanaka's explanation may be a pretense. As gold gets pulled off the market and repurposed as strategical collateral, smaller investors are being gated out. This shift hints to a broader trend. Physical gold is becoming scarce, and who can access it is quietly changing. That was the final information today. I think, Egon, of course, we said it already, no time to gamble, time to get your gold, your physical gold, and time to prepare and take precautions. Your closing statement?
Absolutely. There will be periods in the next few years when there'll be no gold available at any price. That's not going to be for long periods, but there'll be short periods when the demand is such that there's no supply to satisfy it. We will see that, and then it will balance out for a while, etc. But overall, it's going to be harder and harder to get gold, and of course with silver even more so, because this silver in the world, total silver in the world, is so small that market is going to explode at some point.
Exactly, Egon. Thank you for today. Let's hope that we have a peaceful discussion again next month. I always hope this. And again, Egon, my congrats. 80 is quite something. Till next month.
All right.
Grüezi. Bye bye.